Welcome back. It's now time for Forum Daily's weekly energy update with Dan McTeague, president of Canadians for Affordable Energy. All yours, Dan. Take it away.
Well, thank you for that, Nima. And what a week again. We're going to see colder weather perhaps have a bit of an impact on energy prices, but so far so good. We really are getting it good, by the way, with respects to prices that no one expected to be this low for this long. And really, like last week, Nima, when we talked about this, it has everything to do with panicky traders, nervous energy traders who are at the end of the day really concerned about what the U.S. Fed does with interest rates. They're looking at the headline economic data, and it's very strong. Normally, that would be very bullish, very strong for energy prices. People are back to work. The economy is firing on all cylinders. You would actually see demand or the potential for demand to increase. Instead, you have energy traders. I'm not sure if it's because they're not sophisticated, thinking, well, as interest rates rise, because the Fed says they don't like inflation and good economic news, we're going to, in fact, assume that there's going to be a decrease in demand. Nothing, of course, is etched in stone, but it's pretty clear that what's happening right now is the world is truly, when it comes to energy, upside down. I agree with OPEC several months ago when they said energy markets are dysfunctional. I very much believe that. And when you have every agency, even those that are the green agencies, promoting their stuff about not making any more energy, don't invest in any more oil or natural gas. That's the International Energy Agency that did that just under 2 years ago. Even they are admitting that energy demand is going to rise by about 2% this year. So if energy demand continues to rise, oil and gas demand continues to rise, and the production that does not meet that, then it really does create a scenario of much higher prices, and shockingly so, once energy traders get their head out of the sand and realize that interest rates has very little to do with economic factors such as demand, much less supply for oil. On that note, and on that score, we're not going to see much of a change across Canada. It might be up or down a few cents. This is yet another week in which markets don't really know what to do. Refineries are, of course, starting to think about maintenance as they prepare for springtime turnaround, getting ready for the introduction of summer blends of gasoline. That starts very much in the southern parts of the United States as it gets warmer. But it does mean, as I had suggested some time ago when you and I discussed this first, that February would be a very quiet month. And thus it is. March will not be the same. And after the Ides of March, I think we can look for prices to start to, slowly but surely make their way back up until they hit that April 1st and April 15th period. April 1st being the switch, being the carbon tax increasing by, about 4% on the total cost of gasoline, which is, by the way, above the rate of inflation. But we'll discuss that later. And of course, on the 15th of April, you will see the introduction of summer blends of gasoline. Both those factors should at least lend about a 10-cent increase across the board, right across Canada, except for Quebec, which gets a pass under the federal government because their cap and trade program is sacrosanct, and the federal Liberals, as we know, do not want to bite the hand that feeds them, but they will attack other provinces, New Brunswick, Nova Scotia, for having any kind of variation to their carbon tax. What this really means is that even though we have a cold snap here, it looks like diesel and heating oil, and the crisis over that may very well be ending, and that we could see diesel fall another 10 cents a litre in this month. So if you don't like the average price in Canada today, ranging into the region of about $1, roughly about $1.60 a litre, going down to $1.50, then you may want to wait a little longer, because every week or so we could see those prices drop up until the 15th, the 1st and the 15th of April. Newfoundland will soon lead the country in terms of the highest prices because of the carbon tax, as well as the fact that Vancouver is continuing to see moderating prices in the range of $1.85. Alberta, still the lowest at $1.20. Saskatchewan, $1.46 to $1.47. Saskatoon, by the way, $1.41. If we look at places like Winnipeg, doesn't move, still stuck at $1.52 a litre, while Ontario stays in the $1.42 range, with Quebec about 16 cents a litre higher than that. What that really means is that what you see is what you're going to get. Not too bad, not too good, but either way, get ready for the next several weeks, because these, relatively speaking, good times won't last. Well, that's it for this week, Nima. Let's talk next week, and hopefully we'll have more evidence of where prices are going and markets finally firming up as they have to inevitably to reflect fundamentals like supply and demand.
All right, thanks for that, Dan. Again, that was Dan McTeague, president of Canadians for Affordable Energy.